Alright, market update time. I'm just going to bring up like 4 or 5 stocks just real quick. So let's talk about AMD. AMD not doing too good, but do keep in mind that AMD is an uptrending stock. So even if you have like these shitty conditions, it doesn't mean that you're in for a complete reversal. You know, in my opinion, complete reversal is going to be something that crosses over the 200 EMA, the 200 moving average, and you know, if you've got something crazy that's going on, like some really bad news, that's going to be some reversal. Right now, nothing's going on with AMD that would suggest a full reversal. So this could just be some profit taking, especially on this day. You had some pretty high volume. So that's why, in my opinion, I thought that this was going to continue to go down a little bit. But as far as AMD is concerned, like if we look at the intraday, this was going to be the acute support. It's not a very big support. This support is mainly based on the combination of this consolidation period with these dojis and the high of this candle, which is not very statistically significant. It is significant in the sense that this is what it has to break below to change trend, or at least the acute trend. But you know, it's not really a big deal. It's not going to change the overall trend of AMD, in my opinion. So AMD's still doing okay. If you still are holding positions, you know, you're risking something like 9%. So it's not something I'd particularly hold unless you're waiting on the development of this candle. You know, it could come back up in the afternoon to test this area. I wouldn't be surprised if AMD does that. What's another one that I wanted to look over? I think it's edit. Okay, so edit, I put a buy signal here. When I last reviewed it, let's see. So I put the buy signal at the break of the high of this candle, and I put a pretend buy, I suppose. So on a perfect trade, you'd be up almost 10%, you know, 9.26 or whatever. But what I would have done would scale out as soon as I get to cross here, like sell maybe 50%, and then just kind of wait and see what it does and see if it holds the 38.2 Fibonacci retracement. Because the ultimate goal is to take it to 23.6 or to break the overall trend right here. You can see that it's been having attempts to break it. This is the first candle that has gotten all the way up to it and hasn't broken through that trend. So in my opinion, it's going to consolidate even more and potentially head back down unless something happens later on today. Edit, and then BBRY. BBRY is looking pretty solid. You know, I am trading this one in simulation. Let's see. And the only reason why I am is just for curiosity's sake. But do keep in mind that this isn't really a statistically significant thing. Just like AMD, you know, you have one touch here and then the lateral retracement for a trend reversal. So what you should be focused on is this blue line. If you're familiar with the blue line, this is the overall trend, which has way more significance. If I am to go to the year, you can see it has 3 touches, and if you were to continue this all the way back, you'd see that it touches here. Matter of fact, I'm going to try that. Yeah, so it is way more significant in my opinion. So you've got 1, 2, 3-ish. It did test the area, so 3, 4, 4 touches, and you know, to me that is significant statistically. Let's see. Okay, so if you wanted to play it based on probabilities, I'd wait for a retracement back down here, because this runs the chance of consolidating before heading back up. At BlackBerry, you know, if you buy here, your profit potentials are 10%, and if you ended up buying down here, for example, your profit potentials, if it breaks through here and breaks through here and then moves all the way back up, it's 13%. So it's not a bad play. You're not risking much. BlackBerry, one thing I will say is, you know, opinion-wise or fundamental-wise, you know, they're not going to be uptrending long-term wise. They're going to be pretty lateral, if not downtrending. But they did just have a phone release, and you know, we're just gonna have to wait and see what that phone brings in But the way I trade, I'm trading technicals. So I'm not really concerned with the fundamentals of the company, because I'm not staying in long enough to be worried about their overall long-term success. So, you know, if you hear BlackBerry, you're like, okay, why are you trading BlackBerry? It's an awful company right now. They've been going down for so long. Well, yeah, I agree with you, but follow the chart, follow the volume, follow the signals. So, tech, I don't think I brought this up yet. So, tech's looking pretty solid as well. I was waiting on a confirmation, and I kind of missed it yesterday, but this is doing pretty good. Do keep in mind that the S&P 500 gapped up pretty aggressively here, so this could just be a product of this. So, in combination with the low volume on this day, I'm not super convinced this is gonna go high, but I am waiting for that confirmation of the cross of the 20 EMA and the 20 simple moving average, especially if you look at the day trading or the intraday. Now I'm just going to show you the daily chart just because that's what I'm comfortable with right now. But I do expect this to come back up at least towards at least for a 5% move, because you've got the top end of this consolidation period, maybe even up to here for 11%. But the ultimate goal is to bring it up all the way up to here for 30%. So if we can get that, that'd be fantastic. The real test of the move is going to be a break over the 50 moving average. I wouldn't be surprised if it reverses at the 50 moving average at up 11%. So this could be pretty interesting. I'm going to monitor this one to see what kind of volume we get, what goes on with the stochastics, because right now the stochastics are looking okay. If this candle can break for the positive side, then the stochastics are going to be a pretty good confirmation of the trend reversal. So I am waiting on tech. Tech is looking pretty good as far as profit potentials, based on what you're risking with the 200 EMA being so close, or the 200 moving average being so close. With it being so close, you have, let's say you bought here, you're risking, let's say 10% at worst case scenario. For me, I'd feel more comfortable if it breaks below that candle. But if you're playing the 200 EMA, I would go maybe 3% below the 200 EMA for that confirmation that it's potentially going to head back down. So it's just something to keep in mind. But tech is looking pretty good. Edit is looking pretty good if it can hold up that Fibonacci of 38.2, and BlackBerry is looking pretty good if it can develop into a doji or something that would be significant to that reversal. AMD, I already told you about my opinion on that. In my opinion, it's going to keep going down a little bit. Let's see, and that's about all of. I think I brought up Under Armour, but in any case, if I didn't, Under Armour is looking pretty good. If I did, then just skip over this video. But Under Armour is looking pretty good. Not a lot of volume on Under Armour, but point is, in terms of technical, you've got some pretty solid profit margins. It seems as though it wants to reverse the channel. Wait, what is this? Oh, okay, good. Okay, so it kind of looks like it kind of wants to head back up, which is, a pretty solid move. If you wanted to bring it up to this, you got 6%. If you're playing the break, then, you're looking at 32% if you're doing that gap fill. And do keep in mind that gaps tend to fill. Doesn't mean that it will, it just means that it tends to fill. So, I wouldn't buy here. I'd wait for it to retrace back down to around the $18 mark, or the $17.77 for the low of this candle. I would just honestly wait for that retracement back down here, because it seems as though it's consolidating and it's trying to find its price. So let's just kind of wait and see what that one does. So now that's it.